I'm probably the least famous profitable trader or the most profitable unknown trader in the media out there. All jokes aside, guys, today I'm going to cover something that I don't think anyone else is talking about at the moment, and in one of my previous videos I was covering a known trading method that's actually skyrocketed up over 120%. So this week I'm going to cover another unfamiliar or not so popular trading asset class that has gained a little bit of traction, and I strongly believe there is a lot more in the next 3 to 4 weeks or maybe a couple of months. Nobody knows how long, but there are various reasons why I believe that this metal has a lot to show and a lot to be gained from in the next few weeks or months to come. And before we move on, I will just give you a little bit of a hint, guys. So this metal has already been up over 120% as well since the beginning of 2025 to now. So what do you think this metal could be? So here we are, guys. Finally, I'm revealing this metal, and this is palladium. And palladium has been on the rise, but I would say not so much as some of the other metals. And why I think that this is still a hidden jewel in the crown, I think that we have actually a lot more for this metal to go. If you just take this zone up here, this metal has probably around 150% more to grow if it doesn't surpass the previous highs, right? So there are quite a few factors. I would like to start with some of the fundamental factors, and then I would go down to the more technical factors, guys. So we gotta face it, palladium has been one of the most volatile metals out there, and in the next few months there could be an opportunity or a trap. So let's break down the pros and cons of why I think this could potentially be a bullish case. So I would combine this with my technical point of view. First, to start with, I think that this could be a strong bullish setup because number one, we have supply risk. Huge chunk of the palladium still comes from Russia and South Africa. So any trade tension logistically or production disruptions could potentially move the price quickly. And number two would be the macro tailwinds. If rate cut expectations stay alive, money often flows into metals as a group, and palladium tends to spike when sentiment turns bullish. So this is a big number two reason why I believe this could potentially spike the price. And number three is that this is a thin market and it is prone to big moves. So palladium is not very liquid. It is not as liquid as gold. So when buyers step in, price can run fast, which is great for short-term momentum. And as we've seen already, the precious metals have already pumped up quite high. So what is left for this metal is basically just a tipping point, and we can see this to skyrocket as well. Now let's have a look at the bearish side, and this is very important, guys. First, demand uncertainty, and this is mainly about the auto demand. Auto demand is still the main driver, and in any slowdown in vehicle production, this can hit palladium very hard. So you need to be careful here. Second, recycling supply is rising, which can cap rallies if extra metal hits the market. So this also can have a negative impact on the metal. And third is the substitution risk. So if palladium gets too expensive, manufacturers can decide to switch palladium, then basically this can kill the rally very quickly. As you can see, there are certain risks, but I strongly believe that the tide and the wave is here already. So we can see the tide taking palladium as well with the other precious metals, and so far palladium hasn't really outperformed. We have still quite a lot of distance to the highs, and in this next part of the video I'm actually going to walk you through the technical. So let's dig in, guys. It's a very beautifully looking chart over here, and the reason why I'm saying that is because it looks very bullish, and I'm sure lots of traders will actually pick up this trade at some point and then push the price higher. So just a matter of time, and also it's a matter of good entry point. So if you have a lot of cushion, you don't really need a lot of protection, so you might just go long and forget about it, set and forget. If on the other hand you're running on a thin margin a trading account, you might as well want to better time this trade. In fact, it's very hard to time those type of things because you might still get stopped out if the price does multiple retracements. But having said that, it's better to be safe than sorry. So what I'm seeing here is that this is the weekly chart. If we move down one time zone, we're gonna get to the daily chart, and here you can see that the price is doing something similar to asymmetrical triangle. Lots of traders are using this as a bullish sign, so they're waiting for the price to break above this trend line and they will actually go long. For me, this is, in all honesty, not the best way to do it. It might work or it might not work. It is more subjective, so to speak, because it's very hard to decide where and how to draw those lines. So for me, the best way is still to take off a micro demand and a micro supply zone and then work with them, since this gives you slightly more objective way of reading the market and the price action around it. So having said that, here what I will be looking for, even though now for chart pattern trader, this might look like the ideal place to position themselves because there is this type of a rejection or a pin bar looking candle. So this might be a good indication to go long. For me, ideally, I would like to see the price going lower to this part of the zone and only then consider if there is price action confirmation or rejection of this level to go for a long trade. So the good thing here is that if the price does that, this would give you a great entry, so you will be able to position yourself better. And then if let's say you enter at this point, this still gives you a good 130% from here to the top of this supply zone. If you were to enter now, this will be only 90%. If you were to enter at the breakout level here, this will give you 70%. It does look negligible, but if you actually are a little bit more patient, you might almost double your return if you enter from demand zone as opposed to the supply zone. So again, patience pays back, guys. What I would like to see here, if the price reverses and retraces to this area, is to have a confirmation or rejection of this level, which will show me that there are more buyers that are actually joining the party and are willing to push the price higher. Now for me, taking a trade in the middle of the range is a little bit riskier, so I would ideally like to wait and see for a confirmation, but this is ultimately down to you. This is not a financial advice, this is strictly my opinion, so I can be held liable for that, but I'm more than happy for you guys to come back in time and comment if I was right or wrong to wait for this sort of retracement as opposed to take a trade straight off the bat here.